Hey, good morning, everybody. This is Chris Robinson, Robinson Marketing. Hopefully, you got my weekly wrap. It went out a little bit late last night. I apologize for that. Busy weekend here in my household. In any event, a good start to the morning. These corn traded almost through that trend line. We got to get above 490, guys, in December corn. We're right up on that trend line at 488. There's a wedge there. We can get above that, then maybe we can, really get some business going here. And I'm not really concerned about the reason why. There's 1,000 people out there that will tell you they know why this is happening, why that doesn't happen. I, you know, at the end of the day, price discovery is what matters, and we've seen uh, continued, kind of non-stories moving this market. There's something going out there. Luckily, we've recovered after getting slapped around on the June 30th lows. Remember, D score was trading 425 on June 30th. Uh, we got the 492, then it looked like it was over. We tested that 58 level a half dozen times, which was halfway back. It was looking pretty ugly. And here we are this morning at 88. So um, keep your upside open. Now's not the time to be selling two calls to pay for a put. Novi Beans up 6 cents, hit $12. Same idea there. There's nothing super bullish going on there. China, yes, buying beans, but they're not. They haven't backed up the truck yet, right? I mean, they're buying 5 million bushels here, 5 million bushels there, really, 20, 30, 40 million bushels. They need to buy 900 million bushels, right, to meet their promised quota of 25 million metric tons. The wheat market, kind of two-sided. December Chicago is trading at 584 down a nickel. Kansas City's down 7 at 60 and a half. That's going to continue to ebb and flow with what's going on with the Russian uh, Ukraine war more than anything else. As we are now open now for 5 minutes, fat cattle up 70 cents, feeder cattle up $1, and December hogs slightly higher as well. Hogs, I covered this in the weekly wrap. They're under pressure. The funds are now short hogs, and they're basically contract lows. Cattle was a very, very uh, almost picture perfect 62% retracement in the fat cattle. I have that in the weekly, um, and I'm talking about the big move, the one from November to July, the huge move, right? Friday's low, that 215, 216 level, snap right on the 62% retracement. So that's a level to continue to watch. In the feeder cattle, we nearly hit 62%, but we did settle at the halfway back. So, my note was, yeah, all is not lost, but half of the rally is lost in feeders. So we've been trying very, very hard to roll down any puts guys had on this sell-off. Why? Because we don't want expensive puts to go worthless if this market does what we want it to do, which is rally. Anytime you buy a put, you don't want it to work. But if you buy a put that gets deep, deep in the money, you need to take money off the table so you get paid on that hedge. You don't lift it, you roll it down. So if you're interested in learning out more about that, give me a call 312-638-8868. If you're not getting my letter, uh, I'll send you a few free copies if you want to take a look at it as well. I do have a subscription plan as well. If you're interested in a structured program that can help you make decisions as to when to sell bushels, how much to sell, and also what hedges are available. If you don't have the time to do this, I spend 3, 4 hours a day every day writing the letter. So this is my attempt to reach out to you if you're looking for help and you don't have time to do your own homework and that type of plan might appeal to you. Give me a call 312-638-8868. This is Chris. Have a great day. Thank you.